Hi, this lesson is on the new client conversion methods, and you'll be using the conversion manual for version 2011.3. So you should have completed the lessons on the new client using the new client handbook and the accounting training for version 2011.3 in that series. So if you're in the right place, this is the last of the videos on conversion. We went through how to use the UAN software in the new client training handbook. Went through all the major aspects, if not all of the aspects of the accounting software and the general module, accounting module and general module. And so now we're going to talk about how do you actually convert from a different accounting system to the UAN accounting system. This is for whether if you had manual books, paper books, you kept track of your accounting records, or if you had a non-UAN software system. This section is for you on how do you put it all together and convert to the UAN system. Now, most of our customers are not fortunate enough or unfortunate enough, depends on how you look at it, in converting at the very beginning of the year, on January 1st. But it's a lot of work, but yeah, most people aren't going to be converting January 1st, and so you're going to have to get your UAN system up to date with whatever system you've been keeping records in, if you want to have complete financial reports. So we're going to talk about your various options in doing so and what you would need for both budgets and transactions to get in the software. So let's take a look at the first few pages of the booklet. I'm going to be really spending a lot of time in the booklet, more so than in the the new client training handbook. So here we got the table of contents. If we page through this, and definitely you need to get a copy of this book. It should be on the UAN Link website. Call UAN support 1-800-833-8261 if you do not have the correct handbook. You do need to get a copy of this. And as I page through, you can see that there's five actually, I guess you could say 6, but really 5 steps to get converted. The last step is to start using the software on a day-to-day basis. I'm going to be fighting this Adobe feature here all along, I can tell. The right-hand corner keeps popping up. But the first 3 steps, we want to select a budget conversion method, and there are 3 possibilities there. A transaction conversion method is step number 2. There are 4 possibilities. And then step 3 is our data preparation. We want to organize our manual or non-UAN software records in a meaningful way so that we'll be ready to input that information. Step number 4 is our initial setup of the UAN software. This is basically entering the data that we prepared from our manual books for our budgets and our account codes and so forth. And then step number 5 is performing transactions. Perform transaction conversion. And there's 4 different methods that you can choose from there. And this is the process of getting your transactions up to date. So if you're starting June 1st, you intend on doing live transactions in the UAN software, then you'd have to get your transactions up to date from January 1st of the current year to the end of May current year, for example. So let's look at our introduction. It's important to take a look at first. Okay, so we're on page 1 and showing my actual booklet. Well, this guide should be used only for the initial conversion for manual records on non-UAN software to the UAN software. You should be aware that this initial setup phase may require a significant amount of time to complete, depending on how late in the fiscal year the entity is joining the UAN. the current state and completeness of and accuracy of your accounting records in the old system, and the extent of the entity's daily operations. And I would add also, it depends on which types of conversion methods you choose given those circumstances. Please be prepared to plan an adequate amount of time in your schedule to complete these tasks by the stated deadline. Good idea is to read through this book first before you start. That way you can get an idea how much time for your entity you need to set aside to do this. Remember, these are one-time procedures that you will not have to repeat after you begin ongoing operations in UAN. I mean, some of them are yearly procedures, like setting up your budget for the year, but most of these steps are going to be getting you up to date. The bulk of the extra work is just a one-time thing. Before beginning each step, we recommend that you completely read the step's instructions and procedures to which it refers. I would add, because often there'll be a little bit of detail there which will throw you off if you do not read ahead. So I'd read through the step, like if you go, not talking about these 5 steps, but the steps within those steps, read through the sections first before you actually start gathering information or inputting the data. That way you get the full picture before you maybe waste your time doing something that you misunderstood. All right, as I noted, there are 5 steps to conversion. Deciding on the conversion methods, steps 1 and 2, budget or transaction conversion options. Organizing manual and non-UAN software accounting systems records, that's step number 3. So that's gathering the information. That sometimes can be the longest process, actually, depending on where you're coming from. And then step number 3, and then there's a note here, and this is a very important note. Steps 1 through 3 must be completed before an on-site visit with a UAN visiting clerk. So if you're in a situation where you qualify for 8 hours of on-site training paid by UAN, or for one-on-one training to get through the conversion, if you're in that situation, our visiting clerks are instructed that if they come out on site to assist you and they see that really you haven't even started steps 1 through 3, or you haven't completed steps 1, 2, 3, technically they're supposed to turn around, drive back home. UAN will pay them for the travel time, but they're not there to these 3 steps you should be able to complete on your own. And you may gather a number of questions as you go through that, but really up until this point you haven't really inputted anything into the UAN system. And so if you do something incorrectly in steps 1 through 3, you can correct it on paper before you get into the system. So really we want to use those 8 hours of paid on-site visits efficiently, so we really require you get steps 1 through 3 completed on your own, and then you can, wise to make up a list of questions for a UAN visiting clerk. All right, steps 4 and 5, data entry and report verification. Well, this is inputting the information you gathered on, partially that you gathered on in step 3 into the UAN software, your setup information, and then getting your transactions up to date in step number 5. And then depending on the way you do it, but throughout these steps you'll be verifying, okay, I've inputted my budgets. Now I'm going to print a report to verify that I imported everything correctly. It's just a confirmation, since this could be a lot of information. If you're going for an entire year, you want to confirm that everything is in place. Now, we've got a please note. Please note, it is essential that you use this booklet as a guide to the conversion process, but it does not provide detailed instructions on every procedure. For example, it does not explain every step involved in entering a receipt. You should be familiar with this information needed, since these were covered in the new client training class, the other videos. There are also several resources at your disposal for step-by-step instructions, including screencast tutorials, the Accounting in General manual, and online recordings, other online recordings, and this one. Please see the self-training section in the new client exercise handbook for information on accessing these resources. So this booklet, which is about 41, maybe 43 pages total, does not replace the class, the 2-day class, new client that uses the new client exercise handbook, and other self-training you can do to understand how do you enter a receipt, how do you record a budget. This book does not explain it, and this video is definitely not enough. So you need to make sure that you get that under your belt before you proceed. All right, a little note here. You may exit the UAN software at any time during the conversion process. We recommend fully completing one step, then performing a UAN backup before exiting. Well, this is worded not the best way, I think, because not fully completing maybe step number 3 or step number 4, but the checklist within those steps, really step 4 and 5, you'll have a number of steps, or I don't know what else to call them, steps within those steps, and after you complete one of those, complete one in full, such as entering your revenue accounts, and then perform a backup, UAN backup before exiting. We're just trying to help you, prevent you from losing a lot of information and having to re-enter it, if in case there's some kind of power failure or power surge in your system. All right, last point on page 1. UAN highly recommends performing UAN backup after entering large amounts of data. And then there's information on reviewing an overview of the UAN backup process. All right, so step number 1, select a budget conversion method. And there are there's 3 methods. In the summary budget conversion, detailed budget conversion, and mid-year budget conversion. So you want to decide on what route you're going. And I will say that a few things about these. I'm not going to tell you what to do, but with the budget conversion methods, you don't have to, or how should I say this? Well, I'll put it this way. Probably the most popular method of conversion for the budget is the summary method. The detailed conversion method, as you can see, we don't even explain it in this section in full. It's is an Appendix A, because potentially it can create a whole lot of extra work for you depending on how much your budget has changed throughout the year. If this is really, if you're converting in February, you're going live as of February 1st, well, you probably could choose the detailed budget conversion method and it wouldn't add a lot of extra work. But if you've had several changes to your budget, maybe a couple amended certificates, it's now September or October that you're converting, so you have all those months to convert, well, there are some big downsides to using the budget method, because it's going to require a lot of duplicating the information on paper, as we'll see a little bit later. And then option 3 is mid-year conversion. The mid-year budget conversion method should only be used in conjunction with the mid-year transaction conversion method. So when we get to the transactions in step number 2, I will go over that in more detail. You can read through this a little bit on your own, but I'll go over the advantages and disadvantages. So this is a little bit different than the other two. This mid-year conversion has to be done in conjunction with the budget, has to be done in conjunction with the mid-year transaction conversion. I'm going to jump back to the table of contents so I can explain this a little bit better. Or I can show you steps 1 and 2, or 2 and 3. Here, let's see, 1 and 2. So these two, option 3 here, mid-year conversion, must be done in conjunction with the transaction mid-year conversion. The other two options, summary or budget, can be used with any of these 3, whether it's a detailed transaction. So in other words, if you choose the detailed transaction conversion, you do not have to choose the detailed budget conversion. You could record a combination, a summary budget conversion and a detailed transaction conversion. Or the same idea with the lump sum year-to-date these transaction conversion types, 2 and 3 here, you could use either one of these budget options, summary or detailed. The exception is mid-year. You must be consistent and use both a mid-year budget and a mid-year transaction conversion. So I'll jump back to the summary budget method and give you a brief idea of that. When using the summary method, you'll use the most recent amended certificate of estimated resources from the county auditor and include any supplemental budget changes when entering the revenue budget in UEN. For appropriations, you'll combine and enter permanent appropriations, supplemental appropriations if you have any. And if you have any budgetary reallocations or carryover appropriation encumbrances, you'll combine those all in one step per account code. With the revenue budget, again, you include all of those entering the budget into the amounts in the UEN. The advantage is it's far less time-consuming than a detailed budget in most cases. The budget records entered in the UEN are accurate but do not include specific dates of budget changes during the conversion period. Although I don't think that should be, a problem. Because this is conversions, auditors will clearly be able to tell that you converted in this year when looking at that and other things. The detailed records from the prior system will need to be retained for reference. However, you'll be able to file your financial statements using UEN. So choosing the summary method will not prevent you from filing your annual financial records if you choose a transaction method which allows you to do so. All right, option number 2, detailed budget conversion. Like I said, this has gone over in detail in Appendix A. You can read over that yourself. But this requires you to record all your initial revenue budget and subsequent changes separately. Keyword here for appropriations also is any appropriation methods will be measures will be recorded separately. So that includes all these possibilities that we've mentioned before. So you can read over that option in Appendix A. Disadvantages: a significant additional amount of time to complete compared to the summary budget method. You can pros and cons of both depending on how you look at it. Budget records entered in the UN are accurate, include specific dates of changes. So I guess that would be an advantage in the detailed record. However, it's not required or necessary for any of the conversion methods to do so. So you consider the summary method. And then mid-year, I already mentioned, we'll discuss this when we get to the transaction methods, actually later on in the lesson. Step number 2, select a transaction conversion. Choose one of the conversion methods below to convert the entity's manual or non-UN records. UN software transactions. A detailed transaction conversion. Well, when using this method, you enter all the entity's transactions in the order they occurred from January 1st of the current year to present date. You'll start with the first transaction of the year and backdate every transaction to the actual date it occurred and was recorded in your manual records. The manual records used for input can be attached to computer printouts to provide documentation. All right, so we got advantages and disadvantages to consider, not to continue. The software will generate complete annual financial reports at year-end if you choose this method and use this method. Detailed reports of all accounting activity for the year will be generated in the software as if you were on UN for the entire year. It provides practice using the software, which should help reduce errors when you actually go forward with live transactions. And this method provides the most complete and accurate method, but it is more time-consuming than the other conversion methods, especially if you're converting late in the year. If you're starting in September or October, like right now, my current time I'm recording this is September. So if you're starting as of October 1st, and you're going to convert and enter conversion transactions from January to October 1st, and you have a large entity with a lot of activity, a lot of transactions, that's going to be a lot of work. If you're, however, in the same situation, but you're converting as of, you'll start live transactions March 1st or April 1st, well, that's more feasible. It'll require a good amount of work, but it's very good practice in doing that. So depending on where you're at and how much time you have in your schedule, there's the detail method. By no means have to use the detail method. You can use the other ones, and the option 2 and 3 are very similar. These lump sum year-to-date transaction conversion, we'll start with that. When using this method, you enter all the entity's transactions in a year-to-date total amounts for each account code. You will create a generic conversion vendor to use for purchase orders, payments, and receipts. We'll talk when we get into details of this. We'll talk about that later. The electronic payment is used for all payments. So when you go to do payment, well, again, we'll talk about that later. I'll hold that off. So you do this a little bit differently. The advantages and disadvantages. The software will generate annual financial reports for accurate amounts, total amounts for year end. So by the total amounts for all the accounts charged and the revenue accounts, the amounts received, so forth, will be accurate in total for the year end filing. So you'll be able to file your annual financial reports using the UN software. The software will not contain detailed report information for the conversion period. Well, it's because you're entering just a big lump sum. If you start again, if you're starting in like October 1st, then this lump sum method would say you're entering giant purchase orders, giant payment amounts, basically consolidating everything into, as the name implies, a lump sum for purchases, payments, and receipts. And the method gets into details of how to do that, but you're not going to have the details, not as if you performed the live transactions throughout the year. And because of this, manual records must be retained to provide detailed information for audit and for yourself looking back prior years. So it's not complete. You won't be able to, you'll have to maintain both manual and the UN records, and audit will need those manual records for backup. But you will be able to file your year-end filing with the auditor electronically if you choose this method. The lump sum method is really identical, except that you enter lump sums by month. And without getting into detail, by entering the lump sums by month, you're able to do bank reconciliations for the conversion period, month by month. So if you enter in the wrong information for these lump sum amounts, you fat finger typed in the wrong amount, it's easier to find that when you go to reconcile and find out that you're off on your reconciliation as of January or February, to just look at that 1 month and look at that large lump sum transaction just for that month versus looking at perhaps 8 or 9 months, a lump sum transaction for 8 or 9 months. So that's kind of the same thing, but you can enter all your transactions monthly, not in lump sum amounts. So it has a lot of the same advantages and disadvantages, really identical advantages and disadvantages of the lump sum year-to-date, except that you'll have bank reconciliations for each month. And doing that method, you should reconcile each month. All right, the mid-year conversion method. We'll get over this in detail. This is probably currently, in our experience, the least popular option for UN clients that started before. Using this method, you will still need to organize your manual non-UN software records and enter the initial setup information in the UN software, including a mid-year budget conversion. However, the order of the initial setup is different and some calculations are different. Because of this, the entire initial setup process is included in summary form on step number 5, option 4. So in other words, there's a number of unique things about the mid-year conversion that require just for us to start at the beginning in step number 5, including all of the initial setup information that would normally be covered in steps 3 and 4, I believe. Yes. So this method is the quickest method because it does not require you to enter the manual non-UN software transactions in the UN system. Instead of conversion transactions, you'll enter fund balance adjustments so that each fund's cash reflects the cash balance on the first day you begin live transactions in the UN. Additionally, the fund balances you establish will reflect cash balances affected by payments that were made on your manual non-UN software records but have not cleared the bank at the time of conversion. All pre-conversion payments that are outstanding on the subsequent bank reconciliations must be tracked separately until they clear the real bank statements. In UN, then it tells you how you would do this. You're basically going to be plugging in a conversion in your bank rec until everything clears. So the big advantages and disadvantages. Biggest advantage here you can see is it's the quickest conversion method. But there are also a lot of other things to consider. Your annual financial reports for your conversion year will have to be prepared manually. So if you do this method, basically you're just kind of it's like fast track to getting started and entering in live transactions. But I mean, if you start this way, you're still going to have to file your manual books. So you'll have to contact our graphics department and get the forms to send submit your annual financial year-end records to the auditor manually, as you've done in the past if you used manual handwritten records. All right, 1099 reports are, well, they're normally, you'll be able to produce the 1099 report data within the UN software. So if you got your vendors that qualify or are required, you're required to send the 1099 forms to. UN software, as I mentioned before, doesn't actually print the form that you can use, but you load the forms in the printer and will print off the correct data onto that form. That won't work if you use the mid-year conversion for the first year. It won't work because it's going to be incomplete. All right, when the next budget is done in June for the next year, the conversion year history will not be accurate. The conversion year budget amounts will need to be manually adjusted at that time. And here we're talking, kind of jumping ahead to something we haven't trained on, which is the budget software to prepare your tax budget, usually for villages and townships. That's sometime in June, July, due in July. That won't be completely, you'll have to do a lot of more manual data input when that time comes, if you choose to use our software for that. When you prepare for your, oops, wrong one. You prepare your manual when you prepare your tax budget. So that's what that's referring to. And the software will not contain accurate, detailed report information. So again, you submit your manual. You have to submit your annual financials manually with audit. When auditors audit, they'll have to use your manual books that year. So if you use the mid-year conversion. So there are definitely some downsides to consider with the mid-year conversion, transaction conversion. And again, see, I'm having a problem getting rid of that. Sorry about that. There's more to it with the budgets, but we'll talk about that at the end of the book. So step number 3, organize manual non-UN software records. There's a lot to this. Your first step is to gather information in the accounting system's records and organize it in a manner that will be most useful in inputting it to the UN software. The worksheets UN has provided will enable you to accomplish this efficiently. Please do not skip this step. Doing so could greatly increase the time it takes to complete the message. So don't just skip to step number 4. The UN source documents used for data preparation is the UN Chart of Accounts. And we've gone over this several times, and this is how you can access the Chart of Accounts, depending on whether you're a township, village, or library, or special district. there's a note about that. The conversion in water districts, you want to confirm, you must confirm with UN staff which chart of accounts should be used for those districts before you proceed. I want to mention one other thing here that's not in this overview. For the mid-year and lump sum transaction conversions, you need UEN or visiting clerk approval to perform these methods. Now, I'm not saying it's necessarily going to be any problem with, but we do want to hear about that and your reasons for not, and there are very good reasons, can be very good reasons for not recording the detailed transaction conversion, but steps 2, or options 2, 3, and 4 require that you contact UEN first or talk to your visiting clerk about that before you decide on that method. And we reserve the right to say, no, you need to do the detail method in your situation. Excuse me. All right, so back to step number 3. Okay, the conversion worksheets referenced below will be provided in the new client training class in printed form or in spreadsheet form on a CD. Well, if you're watching this video, most likely either this is a refresher for you if you attended that class, or you're watching it online and you're not attending the class, and so you'll need to retrieve these from the website. I believe the worksheet should be on the website. If at the time you check our UN link website and they're not available under training materials, then contact UEN about getting copies of the worksheet. I'll give you a quick flat view of the worksheet. It may not be, these may not all be together in the form that you get them, but we've got 8 worksheets for the typical type of conversion, and those who use the detail budget conversion, there's 4 different worksheets there, alternative worksheets. So we're going to be going over these 8 worksheets. All right, so you'll want to get a copy of those worksheets. I think, here we go, let's see. It looks like I have a couple copies of the manual open here, and we'll see why in a moment. So our, yeah, that's it. So our, on the data preparation checklist, excuse me, my throat's cold is bothering me again, so apologize. We'll read the paragraph here, and then we'll not read all this word for word going forward. Prepare the following information before entering data in UN. Steps 1 through 8 below require preparing the entity's manual and non-UN software accounting system records on the conversion worksheets provided. The approach used in step 9 will vary, in this data preparation step 9, will vary based on the conversion method used. So we'll see that. So steps 1 through 8 use the worksheets. As I mentioned, here we've got the various worksheets and the steps. Now, so if you want to look at your printed copy of the data preparation worksheet, and I'll talk about these different steps. Now, these worksheets are going to be referenced when we get to step number 4, which is actually inputting the initial setup information. And really, steps 1 through 8, or worksheets 1 through 8, all occur based, or for the most part, at least for the detail method, you're going to be doing this for whether it's lump sum or detail. Steps 1 through 8 are pretty much the same, whether you use the options 1, 2, or 3 transaction methods, detailed, lump sum, or lump sum monthly. For the most part, you're gathering the same information. We'll point out the differences as we go. One thing I wanted to make sure we're on the same page before we look at this is the chart of accounts. It refers to, throughout this conversion, the chart of accounts. I went over this in the other class, the new client handbook, quite extensively, but just as in the way of reminder, you'll find all of those under accounting appendices: township chart of accounts, village chart of accounts, library chart of accounts. Keep in mind that for some of you folks, you have on your manual books, your old method before UEN, you may have used a different chart of accounts, such as a alphanumeric chart of accounts that you can find in your village fiscal officer's handbook or your township fiscal officer's handbook on the Auditor State's website. Well, the UEN Accounting Network, the software system, uses the numeric chart of accounts, and so this could be, for some of you, the hardest part is determining which account codes, revenue appropriation account codes, funds, to translate from your old system, the alphanumeric, to the new numeric system. So it kind of just all depends on what you have going on at your entity. So I'll go back, my data preparation checklist. Actually, like I said, you guys can look at that. Let me just get into the software and talk about how this relates to all the exercises we've done in the past. Well, if you look on page 8, it says record your entity's contact information. So this is what we talked about in this really second day of class under general maintenance, entity file setup. Remember how I said this is one of the first things you want to get when you first get your UEN computer and you log on for the first time, to make sure that you got these first 3 lines are accurate. Otherwise, call the UEN support line and tell them, hey, I got a computer and I'm Buckeye Township, but this shows some other township, Franklin Township or some other township. So if it's the wrong township or a wrong county, or the wrong description name of the township, then you want to contact UEN ASAP. But anyways, this assumes you haven't touched the software yet. What you're doing is you're gathering this information to enter later on into the UEN software. And so we provided this worksheet. You don't by any means have to use these worksheets, but they can be helpful. You can make up your own spreadsheet if you know how to use Excel well. You can handwrite them, put them in ledgers if you don't know how to use Excel very well, or use some other method, a spreadsheet or tables in Microsoft Word, and put together your own system. But the idea is that you want to gather this information onto paper first and organize it. This is probably the easiest one. I mean, you should probably have all this information handy anyways, with the exception of maybe the entity ID, the UEN entity ID, but you should have gotten that with your computer as well, and we would have told you that. So you can fill in this information to input later. And then moving on to page 8, number 2, data preparation number 2, checking account information. Well, that's the spreadsheet here. So you can fill in this spreadsheet for each checking account. You want to print this out for each checking account you have. Most people I talk to, they have one checking account. If you have secondary checking accounts, print another copy, and you record the same information. Your contact information. This relates again to, I believe, back in the beginning of class, chapter 1 in the new client. Actually, I can tell you right now. Yes, this is chapter 2, checking accounts, on page 9 of the new client handbook. Well, in that instruction and that lesson, we learned how to add checking accounts. And so we're just gathering this same information we're going to input later. So you get that information together. Now it says, for secondary checking accounts, record the cash balance as of January 1st of the current year. So you want to write that down when you record your secondary checking account information. You input the January 1st cash balance of the current year. Okay, so there's a few extra notes there. So you're just going to want to gather this for your checking accounts. Number 3 then is your fund information, is the third worksheet. And this is where it gets a little more complicated. Well, remember in the software, I'm sorry, I'll be flipping around quite a bit today. In the software, when we added funds, that's when we established the cash balances in the funds. Remember in our exercise, we pretended we were converting, and we established fund cash balances for the funds at that time. That's sort of a one-time thing. Well, we've got quite a bit of detail there on page 9 about setting up your cash balances. When you're filling out this worksheet, well, you're going to have to look at if you have used an alphanumeric system in the Uniform Accounting Network or some other system. You want to put down your old fund number and then the new fund number based on the UAN chart of accounts. It's township, or village, or library. So you determine that at this time, what fund number is in the old, what fund number will be in the UAN system, the name. Remember, some funds you can change the name, so you want to name that here, list the name here. Remember all of the details we mentioned about does it receive its own interest. Some of the funds might have a non-expendable balance of the permanent or private purpose trust fund. Is it an unclaimed money fund? Yes or no? All that information. We've got a few reminders on page 10 about that and how to determine that. Throughout all of this, by the way, in the book, we refer to source documents. Here with checking accounts, you want to look at your bank statements. And with the funds, well, we get into more source documents. You want to look at your cash journal on your manual records or your non-UAN software. And then you want to really get to know your chart of accounts, which we'll be returning to quite a bit. So then you establish the manual fund number. You translate to the new fund number on paper, the new fund name. Then you write down the fund cash balance. Again, cash journal, it's the source here. The fund cash balance as of January 1st, 2000 of the current year. So you'll list, and this is how you come up with a cash balance for each fund. So not by checking account. Remember, we don't establish cash by checking account. We basically enter it separated by funds, and that gives us a total, the checking account, to start off with. So you list the current year, January 1st fund, beginning cash balance for each fund, and then a little bit redundant, the 1/1 cash balance for each fund. Here's the formula. The primary checking cash that is applied, that fund owns, plus the secondary checking accounts, if you have any, that fund owns, and then investment cash that fund owns. You add all of those three together. You don't separate the secondary investment out at this time. You add them together, and that's your January 1st fund cash balance. So remember, everything happens through the primary checking account. So later on, we'll separate the secondary and investments, if you have any, separate that out from the primary. But when you first establish these fund balances, it includes all three of those types, all three of those. All right, then the total for all funds listed at the bottom of the worksheet. If you have your funds don't exceed, I guess, the number listed here, you can make copies of this. But here you list out the total of all funds, and this is a cross-check for you, so that when you enter this in, you can confirm that. So here we got some notes about received its own interest. You can look at your source documents regarding that, non-expendable balances. Let's see. A little side note about that, your source documents for those permanent or private purpose trust funds, these will be the original, these could be the original resolution or ordinance with backup documents that specify how much money was non-expendable. Again, this does not apply to every fund. It's only to those who require that non-expendable balance. You can read over that again. And then yes or no for whether this is unclaimed money funds. Okay, I'll let you read the rest of that. All right, the fourth step in the data preparation is worksheet number 4. And that's the investment account information. Complete the worksheet for all investments owned on January 1st of the current year. Choosing between recording certain types of accounts as secondary checking accounts versus investment accounts was covered in training class. If unsure which to select, please contact your instructor or UAN support or review that section in the training class. The section we covered that, I believe when we got to investments, we talked about the distinction between the criteria to look for determining whether it's a secondary or an investment. Here are a few reminders. You can read through those reminders. So I'll let you read through the rest of that. We'll look at the worksheet. Here's an investment worksheet. So this is pretty detailed. It's probably 1 page per investment. And so that's worksheet number 4. Complete for all investments owned as of January 1st. Investment cash balance as of January 1st. So you want to include what, so that's key idea, as of January 1st, what was the cash balance in this investment? Not as of the current date. If you're converting in August, we don't want to hear the current cash balance as of August. We want what it was when you closed 2000, I mean, I shouldn't say years, but it's currently 2011. You closed 2010, December 31st. January, what did you start off with January 1st, 2011? That's what we're talking about here. What was the value out of that time of investment? And then if it's a non-pooled investment, you'd break it down by fund. For pooled, it's all pooled together, so that doesn't apply. All right, number 5, vendor payee information. Well, this is also a very detailed one. If you go back here, this is worksheet number 5. So here we're just gathering all that information related to the screen because we're going to key in all that. So in some cases, this might be good to type all this in a spreadsheet or etc. And if that's helpful for you, then you have a worksheet to prepare all that ahead of time. So you can just input it into the UN system rather than gathering it from different places at the time. You may already have something that lists all of most of this information, so by all means, if you've got all of this listed out, you just need to select the parts that apply that are different than an UAN, and you can just fill in those amounts and attach them to your other paperwork or whatever. But it's just for your convenience. So again, we're talking about this section in the software under General Maintenance Vendor Payees, and all those fields correspond to what you have here. Okay, going back to the book. Cost centers. Cost centers are optional, again, as a reminder. They're used to add a greater level of detail to revenue or appropriation codes. If you choose to add some cost centers, you'll need to add them to the revenue and or appropriation accounts before recording budget amounts to those revenue or appropriation accounts. Please note, worksheet number 6 is listed on this checklist before revenues and appropriations only because cost centers must be entered into the UN system prior to adding the revenue and account codes. So what we recommend is that you skip this worksheet number 6 and return to it if needed after you review the account information in worksheet number 7 and 8. In other words, before choosing to add cost centers, thoroughly review your appropriation revenue account options available in the UEN chart of accounts for your entity type first. Often fiscal officers will find an adequate level of detail there for most revenues and expenditures, and you may find you have absolutely no need for cost centers. So it's put here because, as you'll see, you attach the cost center to the end of those two types of account codes. But really, you'll just come back. And it's a very simple worksheet, number 6 here. Your different cost centers. You can customize the number and the name. All right, and then we've got number 7 and 8. Important, it's about top of page 13. Worksheets 7 and 8 should be completed only when using the summary budget method or the mid-year conversion method. The detailed method is discussed in Appendix A, as I mentioned before. If you're unsure of the budget conversion method you'll be using, then please stop and review steps 1 and 2 again, or step 1 at least. All right, revenue worksheets. Well, here's your source documents you want to look at to get your information from your manual books, and then for your revenue account information, and then your revenue budget information. Well, we included all this in one worksheet, and then we break it down by whether using it. If you choose the detailed budget conversion, you want to use Appendix A. Refer to that. When using the summary budget conversion, it explains use the most recent amended certificate, as we talked about before. When using the mid-year conversion, you'll want to read over that information. And so let's look at this worksheet. For the summary method, you use worksheet number 7, revenue, and it says the summary budget conversion method. You'll list your old revenue account number, your new UEN fund, revenue code you determined from the chart of accounts, and then, if needed, cost centers, an account name, which is generated per the chart of accounts, and the conversion budget amount. And then you total this. So this is by line item for each revenue account code. So you're going to list out all your account codes and then list the budget amounts, the conversion budget amounts. Remember, this is a summary conversion method. And then you'll total that in your revenue account codes. So total of all revenue account codes for that particular fund. Notice you list the fund number here. Might take more than one page if you've got a lot of account codes in that fund. Probably not for revenues, but probably for appropriations. Possibly, I guess. So this is per fund. I'll let you take a look at that. Okay, for the worksheet number 8, again, the summary method, you'll here's your source documents. First checkbox, you want to look at that, the chart of accounts. The detailed method, again, is Appendix A. Here's the summary method laid out. And so let's look at this number 8 here. For the summary budget conversion method, use a separate worksheet for each fund's account codes. You'll list the old fund number, old object code number, alphanumeric system, then the new fund number, new program code, UN object code, and then so there's 3 components to that, and then the cost center. Now, if you happen to use manual books and use the numeric method, this isn't necessarily new, but if you use a different system than the chart of accounts that we use, you'll need to convert that for each account code, account name, and then this is the calculation. You can kind of see it from this worksheet itself. You'll take your carryover encumbrances for that account within that fund, plus your permanent budget, plus or minus any supplemental or budget reallocations, and add the sum of those out for each account code. That gives you your total budget, total conversion budget. And here's the calculation in the book. So this is definitely different than the way we taught it in class, because we taught that in class during a normal year, you would not include the encumbrances carried over from the previous year. The software already does that. But since you're converting as of this year, the software has no carryover encumbrances. And we're talking about purchase orders, blanket certificates that were open at the end of last year, or maybe even like outstanding checks that had not cleared it last year. So for any of your encumbrances that carried over from the previous year on the particular, for each account code, so you're going to have to break it down at the account code level. You're going to have to, you'll add that to your permanent appropriations, the ordinance or resolution. You'll add that amount in. So you're basically, for the conversion year only, you're kind of inflating that so that, because remember, you need appropriations to make payments. So if you don't have those carryovers worked in, you may not have any, in this fund or an account code. But if you have them, you need to include that so that you can make the payment. Again, only for the conversion year. After this, you never include the encumbrances, carryover encumbrances. Also, your permanent appropriation ordinance. Well, maybe if you're converting, maybe you only had one appropriation ordinance and you had no supplemental or reallocation changes. Well, that's fine. Maybe you had no carryover encumbrances for that account code. That's fine. Then it would just be the permanent appropriations. But if you have any of these factors, you want to add them together and come up with your appropriation budget amount for each appropriation account code. And that's for your summary budget. Again, mid-year is different. Here's some information, and you can read about that and refer back to this later regarding the mid-year budget. It's in the back of the book in more detail. Okay, and then lastly, calculate the total amount for all appropriation account budgets per fund, and list that at the bottom of each page per fund. If it takes 2 pages, then total it at the bottom. But you're looking for that total budget conversion budget, factoring in all those factors. Now that's for the summary method. Now we're not going to talk about in class lesson the detailed method. For the detailed method, we've included all of these additional worksheets, detail number 1, 2, 3, and 4. And that's because, well, you can read it over, but you may have to duplicate all of this account information if you choose the detailed budget conversion. If you had if you had a temporary budget, we'll notice the titles. We got your revenue information, you've got temporary budget, permanent budget, supplemental reallocations. So you're going to have to kind of rewrite all those account codes for all that information if you had a lot of different budgetary changes throughout the year. And so really, if you're doing the summary method, you just have this one worksheet for each fund. So you can kind of get an idea of how it really adds a lot of extra work. All right, and lastly is step number 9. Now for step number 9, we have we don't have worksheets for that step. But you may want to choose to make up some worksheets for some of these on your checklist. You want to gather your transaction information. So steps 1 through 8 is gathering your setup information. Doesn't have anything to do with transactions in the software. It's all pretty much under either accounting or general maintenance. That's what we've done so far. So then here under transaction information, you'll want to gather all of your receipts, and here's a few of the all the receipts, standard memo, interest receipts that posted as of January 1st of this year up to the current date. The purchase orders, all the purchase orders blankets that were opened as of January 1st of this year. Also include purchases that were carried over from a prior year. And then payments. Gather all payments, etc., warranty of T's, that were posted as of January of this year. Also gather all payments that were outstanding on the prior year bank statement as of 12/31. And then there's the appropriation ledger, cash journal for and your non-UN software records. All right, then everything else. You probably just look at your cash journal and some other records for all of your checking. If you did fund balance adjustments, etc., you want to gather those records together, and then order all this information. And the way that you order your receipts, purchase orders, and payments and miscellaneous transactions is based on the transaction conversion option you have chosen. So in option number 1, you'll want to sort all the transactions by the date when they were posted to the manual books or non-UN software. So this helps you do that. So basically you order them. If you had 2 receipts that were posted on January 5th, you put those first. Then 3 purchase orders on January 7th, then you put those behind those. And then the single payment made on January 8th, then you put that, you can order it as it occurred up until the point where you go live. That's part of the detail method. Option number 2, the lump sum year to date. Well, you can read this over. For instance, in this example, an entity records a monthly receipt in equal amounts from the local government distribution, distributing it in 2 different account codes in January. Or the conversion covers January through March. Well, if you look at these account codes, say in January for lump sum year to date, they had $6,000 receipt using this account code. Might have had other account codes. Actually, they do. Maybe this was all the same receipt, and they charge these 2 revenue account codes in January, February, March. So the lump sum total for that revenue account is $18,000. Lump sum total for this revenue account is $12,000. So you're going to make a spreadsheet, a table, a handwritten ledger, totaling up all these information for the lump sum year to date. Do the same thing for payments, etc. Lump sum month now if you choose a lump sum month to date, you'd break it down by that month, so you can look at a couple examples of that in the book. Then mid-year conversion is a lot different. You can read that over, and we'll talk about that later. Okay, we're going to spend about an hour, so we're going to complete this lesson. We're going to pick up with steps 4 and 5 and 6 in another lesson, and that's going to be step 4, entering all this information in the UN software, and the setup information in step 5. We'll discuss the transaction conversions and a little bit in more detail.